Yeah, boy! Good morning, everybody. Welcome to Forex.Today. This live stream brought to you by Traders Way. Let's go. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Is that right? Georgia's about to reopen on Friday? Really? Is that true? Didn't even know that. Oh, look, I'm a disaster today. I'm sorry. Anyways, good morning, everybody. Whoa, we finally got a breakout. That's what we've been waiting for the last 2 or 3 or 4 days. So very nice. So things should be interesting. Oil hit zero. I contacted my relative in the oil business, and he's like, hey, maybe it'll never be the same. And I said, well, hell had to freeze over sometime. He didn't find that funny, though. So anyways, good to have you here. Very exciting times. We had the big crash in late March, then a big recovery in late March, early April. And then really the last 10 days in many situations, just flat. And on Sunday night at 5, we said, be patient. Well, let's be neutral. Monday morning at 8, we said, be patient, let's be neutral. And then last night at 5, we're like, wow, there's some signs of some movement, risk off. We're kicking off certain pivots and certain prices we would expect. We have a little bit of dollar strength brewing in the wind. Maybe we should sell some yens. And then wake up this morning, pa-chow! Nice! So anyways, very interesting, right? Very, very interesting stuff. So now we have a breakout. Maybe we will get some follow-on. So we'll explore that today, technically and fundamentally. Now, please take the opportunity to click the thumbs up button. If you're new to these webinars, please take the opportunity to subscribe. I've been doing webinars on YouTube for, I think, 11 years on YouTube. Been doing webinars in general for about 15 years. I've been trading Forex for a little bit, and I love it. So please get involved, ask questions, take notes. I'm not going to give you a signal, but I'm going to teach you how to trade and also think independently. Right? Cool. And then, of course, Traders Way. We need to thank Traders Way. They're a boutique foreign exchange trading firm. They want to earn your loyalty and respect. And they're starting the relationship by investing into this community and making these webinars available to you with the overriding goal of wanting you to be a successful trader so that you can trade not just for a few days and blow up your trading account, but trade successfully for days and weeks and months and quarters and years and decades. They want you to be a long-term relationship because, quite honestly, it's symbiotic. The better you do, the better they'll do because they'll have trades to execute. So tradersway.com, they make the first move. They've lit the candle. They've poured the wine. Have a seat. Let's fall in love. Tradersway.com. Now, is it just me? Am I hot in here? I think I'm hot. Oh, by the way, someone asked if I could redo the installation video about installing templates, so I did that. It was pretty funny because in the video I downloaded a new version of MT4 from Traders Way, and I'm like, look, here's a demo, and then I installed my indicators and stuff, and I didn't even look, but what it ended up doing is saying, oh, well, you already have this installed. So somehow, I don't know what it did, but somehow it converted my live account and long story short, I deleted all my templates, my files, my indicators, my profiles, my everything. I deleted everything, so I had a naked trading platform. And then I proceeded to install everything, and I ended the video. And then I'm like, okay, so let's go to my day trading pivot setup. And I'm like, wait, I don't have any day trading. I'm like, no! I deleted all my templates. But the upside is on metatraders.com, the video that says start here, learn how to install your files or something like that. That video is brand new as of yesterday. So you got what you wanted, you got what you needed, and it caused havoc for me personally. But that's okay. So anyways, there we are. All right, so let's see how this goes. I'm just expanding this a little bit more. I used to trade a little, but a little wouldn't do it, so I traded more. All right. Share some view on the oil crisis. A little bit late on that one. All right. So anyways, but you know what? I did it in my meditation this morning. I thought maybe I should do a special webinar where we schedule something special. And I do like a history of the oil market, how to do research for the oil and energy complex, and some basic tips and strategies for trading WTI and Brent. What do you think about that? I was actually thinking about that this morning. And I thought about it again while I was walking the dog, so it's in my mind somewhere. Complete overview. Let's say like a 1 hour presentation. Okay. Yeah. So I was just thinking that, and then we can, anyways, let's move on. Okay. So I guess we'll just leave here. So what did the live trading group do last night? Well, we met at 5 p.m. New York. And like I just said at the opening, in the hours and days previous to last night, we were essentially neutral. And one of the things we discussed was, we have a bias, but our job is to confirm market conditions with the bias before we trade. In fact, when you go through the day trading course, one of the things it does is I give you a file where it'll put a little checklist up here so you can check it off. Confirm your bias. I'm a bear. Are market conditions bearish? Yes or no? Okay, yes, confirmed. And there's like 10 steps to go through. And so the very first one after bias is confirm market conditions. And so like Friday, market conditions were neutral. Sunday, market conditions were neutral. Monday, market conditions were neutral. And then last night we were setting up Tuesday trades. And there were just some glimmers of hope for bearishness. So I said, look, I only had a half an hour to do the analysis. So I'm like, I'm just going to make the executive decision. I'm going to be risk off. I'm going to burn through these charts. We're going to look for setups on dollars and Swissies and yens and boom, 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 boom. Right? And by and large, you get things like this was the plan. This was the plan. Okay? This was the plan. There was lots of wanting it to come back up. Oh, it's like, yeah. Well, here's what I think. The money made was not on the trade. So again, going back to Sunday night, do you guys remember when I asked you how you felt emotionally after I go through all the charts? I'm like, there's no trades here. There's nothing here. This is all neutral. Everything is 50-50. This doesn't tell us anything. And I asked you guys, how do you feel about that? Now that's where the money's made. Because I explained to you, if you traded in there, the odds are maybe 50-50, but we know it's only 50-50 when we don't trade. And when we actually trade in bad conditions, we're almost for sure going to lose money, right? But I said it's a confidence game. It's about being confident and about maintaining confidence. And I gave an example of how I lost money and how I lost confidence in the past and how difficult it is to regain it, especially if you've never had it. It's one thing to go from super confident to lacking confidence, to never have been confident and then becoming unconfident, right? So we talked about that. and waiting for market conditions to change so that they are favorable. Now, I think that's where the money is made, because you work so hard to make good trades. And that, right, that takes effort. It takes preparation. It takes planning. It takes discipline. It takes patience. And therefore, it's hard work. And you make money. And then to throw it away on stupid, mediocre, could go any direction type trades is such a waste. Because the hard earned money, right, the trades based on solid analysis, you just threw them away after mediocrity. Like, why work so hard if you're going to throw it away on crap, for lack of a better word, right? So I think the Sunday and Monday morning examples were much more important, right? Of how to maintain your focus, how to maintain your bias. Remember, I said Sunday night, like I said, if you feel like you need to be doing something, reaffirm your bias. And then write down the exact prices you would trade if you wouldn't trade now. Okay? And that's, I think, the big lessons, right? So now then you wait around, you keep your powder dry, and all of a sudden you get this, and sure, now it's easy, right? Well, it wasn't easy up here when you were patient and disciplined. Right? So cool. Right on. Right on, baby G. It's called stepping out to the balcony. All right. Where should we go? It's funny. I'm going to have to create a whole new market scan template. Yeah, that's what I thought. I didn't. Yeah, see, I deleted stuff. All right. Well, how do we want to do this? Well, then let's just roll through dollar bears. Yes, Dan B, of course. So Dan B, when you log in, you know the page you excuse me, COVID. You know the page you log into the live webinar? On that page, there's a playlist now. So it's right there. Just got to reorganize all my profiles so that they fit. Okay. So let's see how the dollar's doing. We know all the yen is strong, so there's no need for me to go over that. Let us put this to a 4, put this to a 1. Okay, it's a 1. This should be on a 15, and this should be on a 5, ready to pull the trigger. 15, 5, 1, 4. All right, cool. So I like to start here. Where are we and where are we going? Okay. The bottom of this week is going to be 61 and a half, 60, 62-ish. And the bottom of the month is supposed to be way down lower than 55. I'm not prepared to make that call. So I'm going to say best case scenario inside month. But we actually talked about this a couple of weeks ago that I expect an inside month. Oh yeah, Prince, you're right. I do have them. I just haven't done it. I have them somewhere, of course. So anyway, so there's the bottom of an inside, and then you have this lined up this way, right? So we got a lower low, lower high. So what would one expect from here? How about that? Oh, let me answer a market question. Grind says, why didn't oil prices and Traders Wave fall like they did on Bloomberg? Okay, cool. Let's talk about this. Let us see. I don't even have oil on this. All right. Well, let's create oil. So this is gold, gold, gold. Same sort of setup I had before. Okay, fine. And I'm going to have to do this for everyone, but this is what happens. Okay, I'll probably have to change these templates. But now the next thing you do is you open this up, and we're going to talk oil, right? Okay, let me grab WTI, 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 and WTI. Cool. So now we got that. WTI. Let's make this a 4, 1. This should be 15, and this should be 5. Cool. And yeah, we'll change these later, but okay, these are fine. Whatever. All right, so now you got to save the profile. So profile, save as, WTI. I guess I should do oil. All right, whatever. Okay. Now, here, let's go back. The question had to do with why was Bloomberg saying prices went below zero, and then you pull up WTI and it's like $10. Okay, remember the derivative. What is the derivative here? This is spot oil. This is based off of spot oil prices. And what Bloomberg is quoting are different futures contract prices, prices of oil in the future. So you have like a May contract, a June contract, a July contract. Okay? Right? So they have different prices. So the spot price right now would be pretty close to 960. Now this, right? But this is a derivative of a spot price where the contract is a futures price of a derivative. And they're the same but different. So anyways, consider this spot oil. Okay? Well, see, what's happening, guys, is to get a negative number, you have to price in the carrying cost. So if you want to store it for 3 months until you need it, well, you have to pay for the storage. So that's going to be a cost. Okay? It's like if you buy a car, you're going to have to put gas in it. You're going to have to fix the brakes. You're going to have to replace the tires. You're going to have to wash it and clean it. You're going to have to pay insurance. Your car has a lot of carrying costs. Okay? Okay, so yeah, so Jesse, you should do some research on the market. So Jesse's like, hey, so that drop, is this all to do with the pandemic? No. So go write this down, Jesse. Go to the OPEC website and go to the International Association of Petroleum, EIA, or what is it? IEA? International Energy Association. So go to the OPEC website, go to the IEA website, and do some research. Okay. So is this all related to COVID-19? No. Does COVID-19 really impact oil prices? Well, to be specific, oil doesn't get a pneumonia. So it would be the lockdown as a consequence of COVID-19 that slows down economic activity and demand for energy. Okay, yes, that would impact the demand side of oil. But this isn't all demand. So let me, I don't think I even have my blank template anymore. Yeah, I got to redo everything. Boo! All right, so anyways, let's do it this way. Okay? Economics 101. Let's do oil market. Okay. Downward slope. That was supposed to be a different color. Come on, drawing tool. There we go. All right. Downward slope demand curve. Upward sloping supply curve. So there's two sides of the equation, both supply and demand. Me. And we have the quantity of oil demanded and the price. Okay? And then, of course, you can make it numerical. 1, 2, 3, 4, 5, 6. And you could make this like millions of barrels per day or something, right? And you can do this 10, 20, 30, 40, $50 a barrel, for example. Okay? This is just random numbers. All right. So, COVID-19 puts the whole world in economic lockdown. Economic activity crashes. Okay? And with diminishing demand, so we have to shift the demand curve. Do we shift the demand curve right or left? D2. So we shift this to the left. Okay? So demand, equilibrium demand dropped from, let's say, 3.5 to 2.5 in this example. That's less demand. Demand dropped from 3.5 million barrels to 2.5 million barrels, whatever you want. By the way, we need like 100 million barrels a day globally. So anyway, so we've dropped, and now let's measure what happened to price. Okay? Price at 3.5 was 30, then it dropped to 2.5, and it's 20. So as demand shifted lower, prices fell accordingly. Okay, so that's COVID-19. Then Russia and Saudi Arabia have a tiff. Because of falling demand, oil prices have fallen, but a lot of the countries in OPEC are absolutely dirt poor, and they need to sell oil just to live. All right? The one thing about dictatorship is you need lots of money, right? And lots of poor people. So anyways, they were willing to sell oil at any price. Okay, they were not worried about profits, they're worried about cash flow. And this really lowers price globally to have too much supply. So OPEC and Russia get together And they're really angry at the Americans. So now you got to look at it because America now produces more oil than Saudi Arabia. So they're worried about, so OPEC is pumping too much oil. Saudi Arabia is willing to cut, but they want to show that they're the swing state. So they need power, which is funny because they're in the energy market. But anyways, and then the Russians come in and they're like, nah, Putin needs his cash. And they really needed a cut because they want to drive the Americans out of business. And long story short, they can't coordinate a deal. And in fact, Saudi Arabia, to punish the Russians for not doing a deal with them, increased supply. So OPEC, like let's say Venezuela and Libya, they need the money. So they're like, we're going to produce as much as we possibly can. And the Russians, right? And Iran, let's pick on Iran and Iraq, right? They need the money. So they're like, F you, we're going to pump oil. And the Russians say to Saudi Arabia, you know what, F you. We're going to pump this. We're not interested in profits, we're interested in cash flow. Meanwhile, the Americans are producing all this oil and it's not unneeded. So in America, each individual producer makes the decision whether to produce more or not. It's not the government. So the way that capitalism works is price drops and then people go out of business. And then we will very quickly have a shortage and prices will recover. That's how it's supposed to work without government influence. But right now, even though oil demand has dropped by 20%, here's the issue. Even with the cuts that were finally announced, the cuts are only like 10%. But there's 20% less demand. So even though a 10% cut in production is huge, is it enough? I think it's 9 million barrels a day, all the countries getting together, cutting. But we're already down 20 million, so like we're still producing too much oil. So what happens? Exogenous supply shock. Okay? And so supply shifts to the left to supply 2. Okay? Creating a new equilibrium point, which is from now, right, from this price to now this price. Oops. Just trying to make that straight. Sorry. Guess I could have gone a little higher. Okay. Wait, that's why I screwed up. Hang on. Duh. Hello. Oh, I got the curve wrong. That's where I messed it up. All right, hang on. That's not, I added less oil. We need more oil. My bad. All right, so we went to here. So now we're producing more oil than we need. So the demand curve shifts this way to S2. We got more oil. Right? And so now we move to equilibria 3 and prices have dropped again. Okay, so prices fell and then they fell again. So you have to look at it this way where, let's find a green color. We were here, then we shifted here, and then we shifted here. Less demand, and we're right back to where we are in production, and it's bad. Okay, so oil dropped, in this example, dropped from 30 to 20 to 10. So the question was, is this all COVID? No, COVID is only the demand side of the equation. right? You got to be careful, Raj. I said I believe the price, the break-even price for Saudi Arabia is 13 to 15. And if they're in the ones in control, right? If they're the ones in control, they wouldn't want to go below that. But I always say it can go anywhere it wants. Price is a market issue, not right. It's not only the producer. Saudi Arabia is not setting the price. They're setting the production levels, and they're anticipating price. Okay? But am I surprised? Hell yeah. This has never happened in the history of the world. That's not actually true either, but that's what you hear. It's extremely rare. So, okay. Okay. So yeah, was it likely? No. Did it happen? Sure. Yeah, totally. All right. So the bottom of the market is supposed to be $4.66. Currently, the low is $5. So we got within a dollar of the predicted bottom. But we have had these supply shocks in the past, and there's a great photo. I don't remember if it was West Texas or East Texas. Hang on. See if I can get lucky and find the picture. Okay, let me put this in perspective. So if you go to West Texas, back in the day, that's what an oil rig looks like. That's them sucking oil out of the ground. Okay? That's what an oil field looks like. There got to be a time when in that part of Texas, so many people were producing oil that eventually the local government, and I think it wasn't the state of Texas, I think it had to do with the railroad. So I think in Texas, there's a railroad commission that can legally force their producers to stop producing. It's very rare. Like, I think in the last 150 years, they haven't used the power. But I think that's correct. And there was a time when this railroad commission, think about it, oil and railroads used to be tied together, that there was a point where so much oil was produced in West Texas that they sent in the National Guard. And if you started producing oil, you were shot on the spot. Do you want to see what it looked like at that point in time? So the question is, why would they do that? Well, they were driving oil to the price of zero. That's what it looked like. Look at these pictures, guys. Okay? So we studied that. So again, this is very, very rare. There's no government organization to tell anybody what to do when it comes to producing oil in America, because America tries to be somewhat still a free market. So if you want to produce oil and lose money, they figure, well, look, if it costs you $50 a barrel to suck it out of the ground, and oil prices drop to 20, you go bankrupt, and that's a good thing. The problem is in America, you're not allowed to go bankrupt anymore, and that's a bad thing. But there is a railroad commission. There is a dude that can sit and negotiate now and have the same powers as the President of the United States. Amazing, right? But this is supply, and this is Think of this as what's going on in the world right now, where there's just so much oil that it's really unnatural. I mean, look at that. Shoulder to shoulder oil production. Spindle top. I mean, look at it. 1903. Do you think oil prices were high here or low? They were so unbelievably low. So if you need cash and oil prices are low, just produce more oil, which then lowers it further. And you so vicious cycle. Right? W. Arthur Lewis in his vicious cycle downward. Okay? So this is kind of what the world looks like right now. Countries should be cutting oil production and they're not. So why don't you walk through Oklahoma and Texas, or maybe Pennsylvania, and say, stop fracking. Just stop producing oil. Stop it. They're like, dude, we need the money. And then why don't you go to Libya and say, hey, Libya, stop. Stop it. Just cut it. They're like, dude, we need the money. Go to Iran. Stop it. We need the money. Go to Venezuela. Guys, come on, guys, stop. Stop producing oil. Stop it. Dude, we need the money. Russia, stop it. Dude, we need the money. Everybody needs the money, and that's the problem. Now, oil prices would probably be $35 a barrel right now, but now we also know we have a demand, right? An exogenous demand shock, which is outside the normal equilibrium of the entire world economy, temporarily at least, shutting down because of COVID. So all of this being produced and at the same time, demand going away. Now, I'm always curious, why isn't gasoline like 35 cents? Why is it still $2? Or $4 if you live in California. It's funny, right? So, kind of cool stuff, right? This is what a field should look like. One. But Highlander, it's not bears. It's the market. There's nobody buying. Okay? So anyways. Do you need some time on your own? So, good morning. Didn't know I was going to do a lecture today. So, who else is going to be affected by oil? Well, let's change this. I feel like I need to be building templates today. Tell vertically. So we got WTI there. Let's take a look. Let's take a look around the world. What do we want to put in here? Noki, 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 can't you see? Sometimes your words hypnotize me. And I just love your jazzy ways. We gotta put USD Kitty Cat on there too. And I'd even prefer a CAD Yen. CAD Yen. CAD Yen there, and that should be enough. Alright. Let's change the template. Swing trading confluence. Swing trading confluence. Swing trading confluence. Swing trading confluence. 1 hour. 1 hour. 1 hour. 1 hour. Cool. Let's organize this. So we should just move this over here. All right. So CAD and yen should move in the same direction as oil. USD NOK and USD CAD should move in the opposite direction because this has to do with the numerator being dollar and the denominator being the exporter. Cool. So, have you been trading these based on oil? Yes. Oh, yeah, by the way, if you enjoyed that little lecture on oil and demand and supply exogenous shocks and the pictures of the history of the oil patch in West Texas, would you please be courageous enough to click the like button? The little thumbs up thing, would you click that, please? Much less than half of you actually clicked it. So just tell Google, tell YouTube this is quality. That's all I'm asking for. Okay? I'm not asking like, hey, pay me $1 a day or something like that. Thank you. Sorry. Didn't get much sleep last night. Anthony says, great breakdown, Wayne, but this is pretty much on Bloomberg last 2 months if people just want to read what's happening in the world. Yeah, like this isn't new. But it's not, I don't think it's explained that way, isn't it, Anthony? Thank you, Agree. Cool. All right. All right. Okay. So, here's the problem. We go from bearish. If you're supposed to be a seller at that price, let me change the color, change the thickness. So you're supposed to be a seller at this price, but this is the target. You're supposed to be a seller at this price. Here's the target. Look how the target is risen. So we hit the target the next week, and we go from an S1R1 inside week. So basically, we went from this range to this range to an even tighter range. Toy. Okay? And now the issue is, where are we going? So the monthlies don't tell us much, if anything, really. And so dropping in here, we got to look at weeklies. So this is the weekly buy zone. Okay, remember on Sunday, we were neutral because none of this had happened yet. And the reason for that is we were here, but we expected that this would likely happen, but this could happen. And really, you really don't know. There's no information. So for example, you know, I mean, there's just, we were either looking for this or we were looking for that, and neither had happened yet, right? So now we have learned it did kick off M3, it did come back to the central, and the bulls won this move. So if you want to remain a bull, you're going to need to buy a dip. Okay? Now, in normal market conditions, hitting this target on a Tuesday means we're going to make a big drop back to the central. Doesn't have to go all the way back to the central, but if you were a bull, I'd say you definitely can wait for a retest of 41.50. You're like, dude, it's way up here like 42.70. Yeah, maybe it'll even go to 43. But the issue is you still have to wait if you're a bull. And there are signs technically that it will fall 70 pips down for you to buy it and drive it up 150. Yeah, okay, yeah, Anthony, that makes sense. Especially Bloomberg tends to do like pieces, not just news, right? A piece on oil. But guys, if you're going to become an expert in oil, I'll have to put a class together for you. So I'm not sure how my schedule is going to be like in the fall. I might be doing Harvard. I might be done with Harvard. I don't know if I want to keep going. I'm going to work over the summer, bang out a class on commercial real estate financing, like REITs and bonds and stuff. And I'm doing one on venture capital. But then maybe by September, if I decide not to continue with Harvard and just be happy with 2.5 degrees, then I'll do things like create an energy complex trading class, maybe do a real estate class, maybe do stock investing class, and put them all together for you guys. But like the complete history of the entire world. So imagine you spent 30 hours just learning oil. Yes, Raj. Okay, like not a 3 hour, but right. The problem is, I don't know how many people will actually do the work. That's the interesting thing. So I don't know how tough to make it and how detailed I should make it. But so like my Harvard class on oil was ridiculously stupid amounts of work. Like retarded, honestly. It was like retarded. Like this class is so stupid. The work level is so dumb. How could anyone possibly get this stuff? Like you can't, there's not enough time in a day. If it was your full-time job, you'd be working after work. You'd be working weekends. Like it was so retarded. It was so much work. A plus. Yeah. But I don't know. I don't know if that's what you want. I liked it because that's why I went to Harvard. I wanted to be retardedly difficult. Okay. So a bear would be looking at it this way, and it's the same kind of process. I think if I was a bear, I'd want it to go up to 43 and drop. Is that what? Yeah, Anthony? Yeah. Morning, Carlito. That reminded me of Carlito's Way. All right. Okay, so Noki is also going to get crushed. So we're already at the take profit zone. And a little bit different of a play. It's a little bit higher, a little bit more elevated. This is more affected by Brent, but... What was the quote from Carlito's Way? Yeah, Billy Bronco from the Bronx. What was it, though? He's like, you want to play big time? You're going to die big time! Was that it? It was something like that. Billy Bronco from the Bronx. Yeah. I just like the period that it took place. They look so good in the long leather jackets and stuff. All right, so let's break this one down. Okay, M2, M4. Okay, perfect week. Okay, that's out of the textbook. Yeah, so many quotes, right? Yeah. Okay? So that's textbook. What are we supposed to be doing here as we go from, 10 to 11? Well, the closer you get to 11, the more you're supposed to take profit. In fact, it's 1077. So, the logical move of the week. Now, this may not be a logical normal week, but we still have to go through the rules of engagement. The rules of engagement say that somewhere in here you should take profit. This is particularly important on a Tuesday because Tuesday sent up counter trend trades. And all that says is there's some potential. Doesn't have to do it. Don't get all mechanical rules based, right? Just say that in a normal week, in conditions like this, we have the potential and very often see a retracement back to the central pivot. Doesn't have to be. It could just come down to here and then go up. Depends on how bullish the market truly is. But you would not be adding trades here. This is where bulls are supposed to take some skin out of the game. Anthony, which one is... Oh, yeah, I'd like that one with Al Pacino. No, the other guy. Yeah. Yeah, no, that's when he was dating a black girl and he was an Italian, right? Yeah. Yeah, that's actually a pretty nice one. That's the one where he says, son, there's a difference between fear and respect. They don't respect him. They fear him. Yeah, De Niro. Yeah. That's a good one too. Okay. So anyways, I think if I was a bull, I would expect at least a drop to here. At least. But even then, I'd probably take the shot. But I'd be worried and I'd always, keep one eye open for a drop as low as this. So it could go all the way back to the beginning. Okay? Sosa. You guys are funny. I gotta move. Gotta go. Gotta split. Rental cars in the Caribbean. Better to be feared than loved. Yeah. Very cool. All right, so you see what I mean? Even as a bull, you really need to thin the herd, take some profit, and then expect some sort of pullback. And then as a bull, you're going to try again, because that's why you're a bull, because you're going to want something like this, correct? Like you're going to think about the trend like this. Let me redo the bottom one. Come on. Okay? That's how you're looking at it, right? But when we get into this zone, I'm going to pay a lot of attention to make sure it doesn't want to go all the way back here, because it very often can in scenarios like this. All right, so Carlos wants to go back to oil. Let's talk about it this way. We need equilibrium. Okay? Equilibrium, where demand and supply are balanced. But right now, we're way out of balance. Okay? All right. So what we need is to say, in a normal day, before Corona, right, just on the demand side, the world used 100 million, I guess let's do it this way, used 100 million barrels a day. Okay? Now, If you go to the IEA and OPEC websites, they tell you what current demand is. How many times have I asked you to do this? Go to the IEA and OPEC websites. And you can go to the EIA website as well, which is very strictly American, but it's data. How many times have I asked you to do this? 50 times? 100 times? So if you go there, they say right now we're using 80 million barrels a day. Okay? So OPEC cut by 9 million, which means we need 80 and they're giving us 91. So prices will fall, as I just told you. But see, look, I'm doing your work for you, though. You should know all this. I've asked you to do it 100 times, right? I give you the basics. Okay, here's the supply and demand equilibrium. Go to these websites and check it out. So you would say, well, what is the demand and what is the supply? I mean, come on. You got to do, right? Take the next step, man. So even with the cuts, which don't even happen until May, think of it that way. Like, it's so stupid. They're like, yeah, we're going to cut, but let's not do it now. So anyways, so shouldn't you wait and see when, let's say, demand goes back up a little bit and the cuts actually occur? So let's say the world starts to recover from COVID and we're demanding $90 a barrel. Or 90 million barrels a day. And those OPEC cuts, it was more than OPEC. It was OPEC, Russia, and the United States agreed to cut 9 million total. So let's say by the time that happens, they're producing, let's just say 90. Or close to it. That would be a new equilibrium. Thank you, Anthony. Thank you, Daniel. Okay. That would be a supply and demand equilibrium, right? That would dictate a new price. If we're not on a true equilibrium, then today's price is not the true price. It's moving. But the issue with supply and demand equilibrium is there's no incentive for anyone to pay a different price or produce another barrel. That's why it works. That's why capitalism works. Okay? The harsh reality of it is if you're a West Texas oil producer and you've borrowed too much money and you're over leveraged, you're in a world of hurt right now. And if you're also in West Texas and you're not over leveraged, this sucks, but you can get through a couple of bad months. But if you can't get through a couple of bad months, capitalism would say, well, then you go out of business. They'll hire your employees, they'll buy your equipment, they'll get a deal because they're taking on risk when everyone else is running from risk. And then oil prices recover a little bit and those guys might do better, or they'll get, right? Or they'll go bankrupt. Okay? But I believe the number is somewhere between 40 and 50 in the United States. Okay? So anyways, long story short, guys, why don't you do the work? Go to the OPEC website, go to the IEA website, go to the EIA website, and do some research if you're interested in oil. I also recommend going to Exxon and Chevron and Shell. So I've studied Royal Dutch Shell, I've studied Exxon. Okay? And they also have very good information about supply and demand. Thank you, Daniel. Okay. I thought we did yens. I thought we did that right off the bat. But anyways, let me rename this. What do I want to rename it? So let me do a couple of things here to finish this profile. Hang on. I want to run. Cool. Very nice. Man, am I tired. Holy smokes. All right. Back to the ends. Back to the ends. Back. Pivots. All right. So how is the airport right now? Is it ghost town or is it pretty normal? Or I haven't been to an airport in like 3.5 weeks. You guys imagine I was just flying to New York 3 or 4 weeks ago? Walking around LaGuardia. Amazing. Okay. Wayne, is it enough confirmation while day trading on a 1 minute, pulling the trigger on a 5A cross after 21? Well, that's how you would do it, right? On a 1 minute, pulling the trigger on a 5A cross after a 20, all on 1 minute? So like, let's drop into this one. I want to run, I want to hide, sit on these walls. All right, so there's many ways to do this. I think the money here is made because you said you're going to sell a retracement up at 65. In fact, that is what we said last night. So around 5 p.m. we were here and we said in the next 5 hours, so between 5 p.m. and 10 p.m., this would retrace back to 65 and we'd want to sell it. Okay, how many people were here for that in my live group at 5 p.m.? I remember Maida's like, beep, 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 5:29, you gotta go, Wayne. She pushed me out the door. I'm like, thank you, Maida. Right? Like, so it was very team and family like. Oh, even Jean Guy got it. Yeah. So that's the level of detail. Okay? You still have to make the decision and you still have to pull the trigger. But that's the whole point of learning. So if you had a crystal ball and it said you should sell at 65, you still have to put together a trade plan. So let's see what happened. A little bit of stabilizing. Up, down, up, down. Okay, we're in our sell zone now. Now what are we looking for? Keep in mind this is a 1 minute chart. Oh, is that right, Ron? Very interesting. Well, now you have to wait in line for Starbucks, huh? So what do you think? Like just looking at this level in here. Is that an accurate level of resistance? And isn't it interesting that we knew that the day before? We knew that 30 hours ago. But anyways, very interestingly, there's our resistance. So how do you want to pull the trigger here? Well, there are multiple ways of doing this. And they're all correct. It doesn't even matter. But let's zoom in here. One person could have a limit order. It comes up, hits 65.08, boom, you're in. You could use a limit. Totally legit. 2, first 5A cross. 5A cross. 3, wait for the 21.55. Oops. And then there's the 21.55 5/8x. Pretty sure a girl gave me a phone number like that back in my college days. You're like, wait, there's no X in phone numbers. I think she gave me a fake phone number. No, she wouldn't do that. Okay. So, one of them would have missed, right? Wrong. Okay. The first traders that took the most risk got the most reward. They either sold here or they sold here. Or down, 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 up, up, sell. So there's really a third. Lower, low. This is clearly a lower, low. Roll reversal trade. So there's 3 trades that would have worked. Limit in, 5A cross, lower, low, lower, high. Okay? What about the 21.55 5/8 cross? No. Is it over? Did you miss it? There is no FOMO. There is no FOMO. There's no such thing. If you have a fear of missing out, it's because you have no trade plan. And you should have fear because that's all you got. So if you were waiting and waiting and waiting and waiting, and this takes off like this, now what do you do? Well, there is no FOMO. There is no fear of missing out. You just say, holy smokes, look at that. Oh, I should have pulled the trigger. Well, I know what I'm going to do next. What do you do now? FOMO's for amateurs. Amateurs with no trade plan. Since you're a hardcore, disciplined, semi-professional Forex trader, what do you do now? You wanted to sell, wanted to sell. Did you miss it? Yeah, well, what is the entry? Well, you start to take a look. Look at the maybe here. Look at maybe here. Oops, come on, I hate that. And then mark this top. And this goes over there, so that's fine. And maybe here. Let me drag this across so you see how far left I look. Okay. Okay. Guess this ends up being the same, so I'll get rid of this. Come on. going to tune these up before I delete. Come on. Cool. All right. So this is what we know, and we're trying to figure out what to do next. You have no fear of missing out, because if it was meant to be, set it free. Oh, a rocket surgeon? Yeah. Okay. Okay. You see what happened? This is a 1 minute chart, by the way, guys. 1 minute. Remember, people tell you you can't trade the 1 minute chart because it's too much, it's too noisy, right? So here's Daniel's 2155 cross, 58 down, gone. So there's 1, 2, 3, and trade number 4. 2155 58 cross. 58 cross, 1, 2, 3, limit in. How does that make you feel? It's true, Mr. Highvolt, but newer traders need very specific rules of engagement, and then they learn how to, they learn their own finesse. Right as rain. Cool. No, well, Mr. Highvolt, you have to make decisions. It's not, if all you did was trade 2155 crosses with 58 confirmations, of course it would lose money. Absolutely, 1,000% over. That's why I keep saying the money is made from having a bias and a trade plan. Oh, I know what I need to do. I need to turn these back on. The money is made saying, I have a bias and I'm waiting for confirmation of market conditions. Okay? So one of the things, like on this pair we talked about on the swing trading group, is that this is a swing trade, not a day trade. And the next day trade is going to look like this. So we're rolling swing trades into day trades. That's where the money is made. Not 2155 crosses. Not 58 crosses. That's the childish side of the trade. The adult side of the trade is taking in fundamental analysis and longer term technical analysis, analyzing it, making decisions, and then corroborating it with technical analysis, and then entering at proper prices at proper time. Right? But yeah, if you just programmed a computer to like sell here. Well, dude, the price is down here. You're way too late. Yeah. Agreed. Agreed. Tear down these walls that hold me inside. Yeah, yen giving some back, huh? Pouring rain. Pound weak. Yen giving some back. Dollar strong. Kiwi weak. Aussie weak. CAD weak. So all commodity currencies seem to be weak. And pound dollar seems to be the best in the moment, as they say in Paris. Yeah, Jess, it's called macroeconomics. Absolutely, perfectly, understandably expected. So in this scenario, I was trying to think of a of an analogy, Jesse. It's like you saying to me, "Dude, why did the humidity go up?" And I say, "Jesse, it's raining." And you're like, "Wow, is there a correlation between humidity and rain?" I say, "Yeah, well, humidity tends to go up when it's raining because it's wet, right?" I mean, they're the same thing. Like, why was the yen so strong today? It's risk off. It's risk off. I mean, it's again, it's like, well, dude, it's raining. Of course the humidity went up. It's raining, right? And you're like, and it's hard to even tell. Did the humidity go up and therefore it made it rain, or did it rain and then make the humidity go up? Well, you can't really tell, right? But the issue here is, yes, there is a definite strong positive correlation between these events. Absolutely, 1,000 times over, right? Cool. So let us be good. 15.5. All right, this is actually okay. So what do you see right away? I see that this is probably going to stop today. In fact, stop now. Don't know if it will, but I said probably. And we're measuring probability here with these green colors. If you don't like the green colors, stop using them. Now, let me blow you away. Let me ask you something. Okay, let me ask the group something. If S2, if weekly S2 is the bottom, what would you assume based out of what you learned in either the trading courses or in my book? But what did I write down as being the likely top? If S2 is the bottom, what does the textbook say the top would be? The textbook says, no, 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 no. Oh, I got to turn this off, I guess. No, 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 no. Wow, 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 wow. Whoa, dude. What? That's what the textbook says. This predicts this. So if you sold now, you don't know what you're doing. That's it. You don't have a trade plan. You don't have a strategy. You're. I don't know. I don't know what you're doing. So Alex says now. Someone says, "Oh, so Daniel's like now maybe a counter trend, plausibly, right?" And we covered this in other pairs. Plausibly, plausibly. In normal conditions, you could expect, let's say a move like this, because I'm looking right. I'm looking at this, or a move even higher, and then this is a big question mark after that. It could continue going higher, or it can go back down. You don't really know. But the issue is, you can do whatever you want. You just can't sell. Sort of like Henry Ford. You can add any color you want as long as it's black. Well, you can do whatever you want here as long as it's not selling. Okay? Now, would I buy this? That's not what I do. I am a macro trend trader. Trender. I'm a macro trender. I kind of like that, actually. I am a macro trend trader. So another way of looking at that is I will trap this in a range. And using now technical analysis, because my fundamentals wouldn't have changed. So using technical analysis now, if it comes up to 24, I might dump it. That's it. And if it doesn't, I don't really care. Like, who cares? Okay? Yes, please be careful and safe. Sorry to hear that, Ariel. My wife has it, and I possibly have a mild version of it. Mild. Well, I went to New York and got it, brought it home. So my wife has been sick for a month, and I got a little bit of it, anyways. The interesting thing is in Georgia, they refused to test her. She's like, well, I've had a fever for like 20 days straight. My lungs are on fire. I can't breathe. I'm so ridiculously tired. And they're like, yeah, we're not going to test you. And then friends of ours, she works for a major airline in the Atlanta area, was traveling all over the United States in public, obviously, and Delta didn't give them masks, didn't give them rubber gloves, no protection at all. And she got super sick, ran fever for again like 10 days. Her lungs are on fire. She can't breathe. And they refused to test her. And then, how about this? Friends of mine, they go on cruises. They go on like 10 cruises a year with their kids and everything, like crazy, right? So they're on the cruise in San Francisco where people were dying on the ship. They get off the ship before the quarantine and they're too sick to get home. So they lay up in a hotel for a few days because their children are too sick. They get back to Georgia, they refuse to test them. Oh, I'm really sorry to hear that, Maida. My condolences. I'm really sorry to hear that. Yeah, one of the toughest guys I've ever met was Cuban, and I swear to God he was at least 91. And I've told the story recently, so I won't tell the long version. But anyways, I see him in his backyard. One of his fruit trees had died, and he's back there. He's got his shirt off. His skin's turned to like leather, and he's dug up the roots of this tree he'd cut down by hand. Then he dug out the roots. So there's this big hole in the backyard, and he's down there with an axe, hacking away at the roots. And by the way, that's like hacking at stone. And he's down there, and the guy's in his 90s, and he's smoking cigars, and he's eating greasy pork, smoking a cigar, whacking at this thing. Toughest guy ever. I think he probably lived to be 140. Cubans are tough. Sure, he fought it all the way, Maida. We should teach Cubans how to trade Forex. What a liberating, like I always look at trade, like Forex in particularly. It's so liberating. Um, as long as you got an internet connection, you have equal access to everything on this planet. Doesn't matter what culture you live in, who your daddy was, doesn't matter what school you went to, the color of your skin, the God you pray to, none of it matters. Now, usually when you go through society, these things do matter. Right? These things do matter. It's kind of why I went to Harvard, is just to show the sons of bitches that I could do it, right? But Forex doesn't care about these little things. So you have equal access. As long as you got internet, you can go to the EIA, IEA, and OPEC websites today and do your analysis and learn everything you possibly can about the supply and demand of oil and the energy complex. And slowly over the next 2, 3, 4, 5, 6 years, you can become an expert in trading the energy complex and do it from your kitchen table on your $400 laptop and change your life and change the life for you and the loved ones around you. I think that's amazing, right? And if you're taking care of children, or if you're taking care of old one, elderly, and you got all this stuff going on in your life, maybe even have a part-time job. But the interesting thing about Forex is it's perfect if you need a flexible schedule. I mean, just, it's so liberating in so many ways. You get better leverage than options. You get better leverage than futures. You get better leverage than the stock market. In the stock market, you can't eat your profits because they're all paper profits. If you bought Apple at $6 and now it's $1,000, you haven't spent any of the money because it's just paper money. You have to sell your position to get paid, and then you got nothing. Well, in Forex, you collect rent on your assets. You get paid in real time, mark to market. The profits are already in your account from what you did yesterday, and you're still in the position, earning interest and capital appreciation. Even though you're still in the trade, you've already been paid. It's so better. It's so much better than so many other opportunities. All you need is a cheap computer. Like, I mean, if you get a desktop PC, I bet you can get one for $50 right? And an internet connection. That's all you need, and you're in business. No accounts receivable, no accounts payable. Nobody you have to bribe because you need a permit or something like that, right? Even from a phone. It's not ideal, but it can be done. It's not ideal. Okay? Mr. Connor says, yeah, they do get dividends. Every day? No, not every day. So KG, like I gave an example earlier that in May of last year, I took a Euro Turkish lira trade. I was in it for 10 months. And in month 10, I got knocked out at break even. I made 0 pips. I actually lost like 3 pips. Okay? I lost 3 pips on a Euro Turkish lira trade. And I made 1,000% return on investment. Drop the mic. Holy shit. Thank you, Forex. Right? You can't do this. Taking an options trading course ain't going to help you. Okay? You got everything right here, and you have all the advantages right here. I teach you to think ahead. I teach you to plan. I teach you to be patient. I teach you to be disciplined. We don't talk about yellow Lamborghinis and easy money. But if you walk away from this, just get a job. Because if you see all this and you don't put 1,000% of your energy in, and you're like, this is it. This is what I want to do for the rest of my life, and I'm willing to fight for it. I don't care how much it takes. I'm going to do this. This is it. If you don't got that kind of commitment, go get a job. Go work at Starbucks. At least you can eat yesterday's bagels. Okay? But I would fight for this. There is nothing better. I was a venture capitalist and I dropped out. I walked away from my beautiful office with views of the San Francisco Bay. And I said, you know what? Take this job and shove it. And it's a job I loved. I worked hard to become a venture capitalist for years and years and years of growth and learning and sacrifice and effort. Literally, I'm not joking, working 24 hours a day. And then I'm at the pinnacle of my career and I throw it all into the San Francisco Bay and say, you know what? I'm going to go work out of my home office, which in the San Francisco Bay Area is the size of a closet. The closets were so small, I couldn't get a suit in them. True story. The door wouldn't shut. My suits were too big. Like, who the hell built this house? Welcome to the richest country in the world. Houses with no insulation. A friend of mine bought a house for $1 million. I think it was more than $1 million. Now it's worth like $2 million. But anyways, he bought it for $1 million. And then he had a home inspector come check it out after. I don't know why after. And then the home inspector's like, hey, do you realize that someone has wired the electrical of your house using cords they've cut from a lamp? For $1 million. He's like, what? He's like, yeah. Someone took an old lamp and they cut the cord and they cut the plug and they used the wire and they've dragged it across your ceiling to wire your kitchen. What? You're joking. So anyways. Okay. So anyways, I would fight. Jesse boy, I love Forex 1,000 times better than the venture. Because the thing is, it's intellectually interesting to be a venture capitalist. You got to look at a lot of deals, do a lot of analysis, and 99% of your work leads to nothing. But then 1% of your work leads to a deal, and in which you don't know if it'll be a success or a failure for about 5 or 6 years. And then you'll find out, wow, you worked for the last 5 or 6 years and nothing really has come of it. Or even worse, the guy in the office right next to you, he made $1 billion and your deals haven't done nothing. And you're like, what? His dogfood.com got bought by Microsoft for $1 billion? Yeah, that's what Microsoft does. Buys crap for too much money and then drives it into the ground. So anyways, so venture capital is very slow. I love the idea of last night we put together 5 or 6 or 7 plans to sell all the yens. And then you wake up in the morning, all the yens have dropped. And you're like, oh my God. Right? Just raining pips. Raining pips. You're like, oh my God. It's right? That's what I like about Forex. Instant gratification. Okay? So I want to go to Cuba with Maida. We should do a trading event there. Rum, cigars, and pips. We'll provide the rum and cigars. You have to bring your own pips. Yeah. Traveling, right? Yeah, I've been in Africa for a couple of years. But Cuba's on my list. I want to go to a Cuban baseball game. When was the aha moment? I don't know if my aha moment wasn't actually Forex. Oh, is that right, Maida? Oh, okay. My aha moment was I was in my office. I had just decorated my office, in fact. And my wife would laugh at me because she's like, why are you buying all this crap for your office? I'm like, it's my idiom. She'd laugh at me like, you're so stupid. So anyway, so I decorated it with my idiom. I forget what it was, but it was some wonderfully designed, Pottery Barn office. Perfectly designed. And at the time I was reading Architectural Digest, and it was talking about this kid that bought an $8 million apartment, and then 2 years later he flipped up for a couple of floors up, and he paid $10 million, and then he flipped that and moved a couple of stories up to and bought one for 12. And at some point he bought this $20 million apartment, and it was gutted down to the I-beams, and he brought in architects to redesign his $20 million apartment. Now on like the 90th floor of some skyscraper, right? With views of the park and everything. And that's why it was an Architectural Digest magazine, because the architects were famous and all that. And at the bottom it said, the owner was like 28 years old. And I'm like, what? Because I must have been about 28 at the time. I'm like, what this kid bought a $20 million apartment, stripped it down to the I-beams, is dropping another 5M on decorating it, and this a-hole is 28 years old? Like, what the hell does this guy do? Because I don't have that kind. I'm not a baller like that. I'm just a venture capitalist in San Francisco, right? And so, and it said he was a paper trader. And I'm like, holy shit. what the heck is a paper trader? So I started looking into things about finance and what traders were, okay? And ran into Forex. So now I'm reading Forex, and I remember that article. I got my feet up on my desk, looking out at the Bay Bridge, and I'm reading this article, and I have to like take my feet off my desk. I'm like, what the hell? Forex is a $2 trillion a day market? Like, let me double check that. Yes, 2 trillion. Let me check again. Per day. And I dropped the magazine like, well, that can't be true. Like, that's impossible. How can that be $2 trillion? Not a year, every day? Like, there's no way that can be true. That you could take all the money in the world and it wouldn't add up to 2 trillion a day in volume. I'm like, there's just no way. And I looked at it and I'm like, holy shit, it's true. So what do you know if you're an entrepreneur? Go where the money is. And I'm like, really? 2 trillion per day. And all you have to do is buy, sell, or hold. So then I look it up and I'm like, well, what's the success rate? It says, well, 95% of new retail traders fail. And I'm like, yes! I'll never forget. I'm like, yes! I can beat 95% of the people just by getting out of bed. That's how I looked at it. I'm like, 95% of people can't do anything. So I'm like, that's it. This is what I want to do. So I popped some money into, I think it was an FXCM account. And that was that. That was that. I'm like, bring it on. Because an entrepreneur, 5% success rate is massively. Okay? Massively high. Like, oh my God, there's tons of room for me. Entrepreneurs often say, well, if I had 1%, well, dude, 5 is tons of room, right? So anyways, that's what I did. I've had some hard times, but I've never blown up an account, no. I've had some hard times, though. Don't get me wrong. But see, I never traded anything before. Traded. Before that, I had bought Apple for $6. So I owned Apple and I owned Cisco Systems. So I knew I wanted to be rich, and I knew that's what rich people did. So that's what I did. Literally, I had something like $20 one day, and I bought Apple stock. Well, and then, right? So anyways, it was like that. Like, I spent all my money. And so whatever, invested. But I never traded. And then I'm an entrepreneur, and entrepreneurs invest in themselves. They invest in their business. Then I became a little bit of a successful entrepreneur, and then I became a venture capitalist and all that. And you have to realize that I came to trading with a business mind intact, an attitude. To me, it was business. Okay? It was a business with no inventory. But I looked at it as a business. Business mindset, risk reward, and all this kind of stuff. Having plans, having cash flow statements. And I never looked at it as, I think a typical person looks at it, where it seems to me, and maybe it's just YouTube, but people come to Forex and they want to get rich quick. But that's a fool's errand. That doesn't happen. I don't care what market you're in. You're not willing to put in the time, you ain't going to get rich. So there is no such thing as get rich quick. It's a total mirage. It's just going to lead you farther and farther out into the desert, in which you will die laying face down in the sand. Okay? But getting rich slow is it's like almost guaranteed. If you want to get rich slow. Put in the time, let it compound, It's only a matter of time. Yeah, just amazing, Daniel. Just amazing. So this is a business. You should look at it that way. Okay? Is that what I said in the book? That's cool. Sounds like me. And Javier, we're going to get to like the 15-year anniversary of that book or something pretty soon. Those the words are as true today as it was back then. Okay. So look at this as starting a business. This is a career. You have a long-term view. You look at your trading account and you measure it by years, not by days or minutes. Okay? Like, for example, if you want to get rich quick, do you start a restaurant? If you want to get rich quick, do you start what? Supply chain management consulting firm? Like, it's such a weird thing or attitude. Like, most people don't wake up in the morning and say, I'm going to get rich quick. Yeah, it's not a healthy mindset. And I think that needs to be one of the things that's addressed if you're a currency trader. If you have that, you need to learn how to harness that. Because it'll give you positive energy when you need it, but it could also be the thing that will drag you down. Okay. By the way, was I clear when let's go back to this. Was I clear when I said you can do anything you want, you just can't sell this? And it was all red candles when I said it. Yes, Daniel. Never let a crisis go to waste. Well, that's what I'm saying. But often people do, like many people don't even know that that's support. Right, Sasson? Many people don't even know that that's support. They're not looking at 122.75 and a half as a problem. They just don't know. What most people do, or not say most, many people do, is they log in and they see it's been down all week. So now they want to sell. Okay? So look at this now. Does this give you confidence that the tools we use are appropriate? Hey, VJ's in the house. We miss you, buddy. Hope everything's okay. Hope you're safe and healthy. We send our best wishes to you and your team. I'd ask what the weather's like in Guantanamo, but never mind. I know you can't answer it. Gitmo, baby! Gitmo! Boop, boop, boop. Yep. Get more money, get more problems. Yeah, you wrote it too. That's funny. Get more money, get more problems. Yeah. Uh, of course, it's absolutely, totally, definitely not Gitmo. Yeah. Cool. You guys still having fun? If you haven't clicked the thumbs up button, would you take an opportunity to do that, please? Please let YouTube know this is quality content. Okay. So notice what we did here is we went to the indices. And we found that pound was weak, dollar was strong. Where's dollar? Dollar was strong. Then we go to the pound dollar chart. We can see that it was falling all week like the indices indicated. And then I opened up our charts and said, no. Many people use tools like the tool is the crystal ball. That's why I'm very hesitant giving out things like indices. There's 1,000 tools that will do something similar, right? Tell you what's strong and what's weak and all that kind of stuff. The problem is people go in and say, well, I just looked at some tool and it said the pound was weak, the dollar was strong. Then I look at this and all I see is down, so therefore sell. Okay? And that's not how to do it right. You are the crystal ball. And yes, it has been falling all week. Yes, all week you've had opportunities to trade this. All I know is stop. That's all I know. And if you had liked it as a bear, you had plenty of opportunities back in time. And what else did I tell you? I don't know if it was this or another trade, but I have something like this in mind. Because I'm the boss. And the boss isn't worried about today. The boss already gave out orders yesterday. So now the boss is worried about tomorrow. So I'm setting up tomorrow's trades right now. And everyone in my live trading group, we will gather at 5 p.m. Okay? And we are going to set up tomorrow's trades. If you want to join the group, the link is in the description below. If you want training courses, there's an 80% discount in the description below. Other than that, be safe, be healthy. Thank you for being part of this community. Thank you for treating everybody here with dignity and respect. Peace on earth. May the pips be with you. May your profits be above average. And please don't forget to subscribe. I will see you tomorrow or tonight at 5 p.m. if you're in my live trading group. If not, I will see you tomorrow at 8 a.m. for tomorrow's webinar here at Forex.Today.